Hey, Archie, last week I went to the doctor to find out how unhealthy I am. Is there a way to do that with my finances?
Well, Rob, let's have a checkup. I'm Archie Hoxton.
And I'm Rob Hoxton.
And this is Last Paycheck, weekly wisdom to help you retire and stay that way. Well, welcome back to the Last Paycheck Podcast, brought to you by Hoxton Planning and Management. We're your hosts, certified financial planners Archie Hoxton and Rob Hoxton. And today we have a question for you. Are you financially healthy? And hopefully we can answer that for you. We're going to go through some criteria so that you can kind of take yourself through a financial well-being checkup.
So do you want me to stick my arm out so you can take my financial blood pressure?
Sure. I'm not sure how to do that.
Oh, well, what's the most important thing, Archie, in your view, as far as financial health, well-being?
Yeah, it's very hard to rank them because it's such a unique picture. Like everyone's financial well-being is kind of unique to them, and where to start is, again, it's a unique question. But I would say my first place to start would be with an emergency fund, right? So having a backstop that can be there for, to cover insurance deductions.
You've got to replace your roof.
Yeah.
Right.
Deductible. I mean, yeah, if you have to replace your roof, if you need a vehicle repair, if you have a home repair of some kind, you have a leak in the house and that causes some damage and you've got a deductible for your home policy.
Right.
Where's that going to come from? Well, it would come from an emergency fund if you have kind of got your financial health figured out. Where you wouldn't want it to come from would be something like a credit card that you didn't have.
Or an investment account, especially a retirement account. The idea behind emergency funds. So, and we get this a lot. So if you have an emergency fund, let's say it's 6 to 9 months worth of living expenses, just as a rule of thumb, and all of a sudden there's an emergency and you need that money. You don't want to have to sell investments if it's not a great time in the market to sell investments. You don't want to sell when the market's down because of an emergency. So yes, it's true that your money that's in an emergency fund may not have the same higher expected rate of return, so that maybe you're giving something up there. There's an opportunity cost. But still, it makes sense to have that liquid.
Absolutely.
Right? Maybe insured deposits at your bank.
Right.
And easy to put your hands on.
Yeah. And it doesn't mean that money has to be completely on the sidelines. Anymore, money market funds, CDs, high yield savings accounts, you can usually expect to get 3 to 5% on instruments like that. So it's not like this money is just a total drag, but it really is important to keep it liquid because these things can happen anytime. It can be overnight. All of a sudden, your financial situation can be radically changed if you're not prepared.
So when I think about wellness or health, I think about when I go to the doctor, they do a series of blood tests. Afterward, I get this report that tells me what my triglycerides were, my blood pressure, what my, blood sugar, all that kind of stuff. So I love having that kind of a dashboard, so to speak, because then I can keep that information and look at my progress between now and the next time I go to the doctor. And the same sort of thing is available in your financial life as well. So when we think of like debt, so if we were to try to think of debt in the same way we'd think of blood pressure, what's too much?
Yeah.
Right?
Well, I mean, the kind of classic rule of thumb is if your debt to income ratio is greater than 35%, so 35% of your income is going to your debt, then you're probably, if it's over that, that's probably a problem that you need to address. And I'd also throw in that in certain cases, it may make sense to focus on debt before you get to like, I want to get a 3 to 6 month or 6 to 9 month emergency fund. That could be for you the first thing to deal with.
Chip away at the debt.
Yeah. If you've got consumer debts, credit cards, car payment that's taken up all of your excess income, that might be a serious problem, and you might need to tackle that first.
With credit card rates at 25 or more % now, you are giving your future to someone else if you're carrying that kind of debt.
Yeah, yeah. You want to take control of that and throw all of your resources at it. You know, until it gets to a point where you can then start saying, all right, well, because that's where the emergency fund comes in. The emergency fund is protecting you from going further into debt. It's protecting your retirement plan. It's protecting, your longer term goals. But there's another really important thing you need to do to analyze your financial health that's really sort of protection oriented, and that's making sure that you're adequately insured.
Yeah.
So if you think about these different, so if you have an emergency fund, that's for the smaller things that come along, maybe paying an insurance deductible.
Yeah, things that you can't insure.
Things that you
or
can't
wouldn't
insure.
Yeah.
They maybe wouldn't destroy you financially. You buy insurance for the things that could completely just cause a catastrophe in your financial life if they were to happen, worst case scenario were to happen. For example, your home burns down, right?
Mm-hmm.
If you didn't have insurance, say you owned your home outright and you didn't have adequate insurance, that could destroy your financial life because now you need a new place to live.
Right. And the good news is that banks won't lend money on mortgages without making sure that you've got insurance. In fact, they're so serious about it that, as you know, they have these escrow accounts. So part of your payment when you pay your mortgage is the escrow for taxes and insurance, because they don't want some sort of otherwise insured catastrophe to make the house worth nothing. The other thing is they don't want your house auctioned on the courthouse steps because you didn't pay the taxes. So they're going to do that for you.
Right.
One of the often overlooked and really important sort of catastrophic coverages is liability insurance. So you can insure your property, your car, your auto, your house, your auto, all of that, the things that are in your house. But the liability piece of it is potentially the part that is the biggest. So if your teenager goes out in your car and has a massive accident and people are injured, you're probably going to get sued. And that liability coverage is going to defend you, so it pays your legal costs. Plus, if there's an award that's determined from the court, it may cover part or all of that. The uninsured and underinsured motorist coverage is another one that's huge. So if you get hit by somebody who doesn't have insurance or doesn't have adequate insurance and you're in the hospital or your car is totaled, you need to make sure that there's insurance on your policy that will pick up the difference.
Right.
So there are a lot of these different coverages that people aren't thinking about. And if you have a financial planner, that planner ought to be reviewing those policies periodically to make sure you have adequate coverage, at least the liability part of it.
Right. Yeah, because these are the things that could be catastrophic, that you just can't afford ever to happen. So that's why you need the insurance.
Right.
Another really important risk for insurance, a couple of them, is you're protecting your human capital, your future earning ability. And that can come under threat through generally two ways: if you were to become disabled or if you were to pass away. And so two types of insurance protect that, because that would be catastrophic, right? Especially if you have a family, you have people who rely on you for that income and the rest of your earning years, you need to protect them from the risk of the total loss of that ability to earn income or partial loss. So if you become disabled and you can no longer work in any occupation, you can't receive an income. And so there are some backstops like Social Security, but you need to have some kind of additional protection, because the likelihood that that's going to be enough is probably not great.
Here's a real life example that may apply to you or may not. But if you are a younger person, new family, fairly new in your jobs, have a little baby, and maybe you don't even have a mortgage yet, do you need disability and life insurance? And the answer is absolutely. If you are an older person like myself that has children or grandchildren, this is a conversation you might want to have with the younger person in your family. If you if you are working hard and making money, you have a baby and you have a spouse that's maybe not able to work at the moment because she's at home or is working less because the baby's young, you don't have any other debt, you may think that you don't need life insurance. You absolutely must have life insurance, because if something happens to you as the breadwinner, somebody needs to make sure there's money there to make sure that the child has an education, the child has a mom or a dad there to be able to take care of them.
Yeah.
Those are things that you need to think about. And life insurance is so inexpensive when you're young.
Yeah, and especially
Get
if
as
you're
much
buying
as you
term
can.
insurance.
Absolutely term.
It can be like crazy cheap. It doesn't make sense not to have it. You can buy a couple $1,000,000 and of coverage or whatever, and it's like you add up a couple streaming services and bam, So it's really, really important, because that's one of the huge risks that younger people face, especially.
So just kind of moving on, as far as knowing whether you're financially healthy, in financial planning, we assess a person's situation and figure out if there's anything they ought to be doing differently in order to get where they want to go as efficiently as possible, right?
Yeah.
So one of the things, the big question is am I okay?
Mm-hmm.
Am I doing the right things? One of those important ones are you saving enough?
Yeah. Yeah. And right, so, and that's the thing. If we're going through this as a checklist, like, okay, you've got an emergency fund, you've got manageable or very low levels of debt, you've protected yourself and your family from massive catastrophic risks, and then you're saving for the future, right? And so that combination that's very, very, very healthy setup. And the future, part of that is knowing what you need and want to achieve, right? So that could be retirement, right? That's a very important objective to save for. Could be the education of your children or maybe your grandchildren. That could be saving for a down payment on a house. Could be saving for a vehicle. I mean, there's so many things that you can save for. And then beyond that, are you prioritizing them? How much are you saving to each? And this is kind of where we get into, I would say, the cornerstone piece of financial health is having a financial plan in place. This is kind of like, once you've got all these boxes checked, do you have a plan? Now that you know, okay, I've got the means to move forward, you kind of need a roadmap.
Right. Yeah, a good certified financial planner is kind of like your money doctor. I mean, not to overdo the analogy, but they're kind of like your money doctor. They'll tell you, number one, they should give you a financial snapshot that says, here's your health, your financial health as it currently is.
Right.
Right? Are you healthy? Are you not? Do you need to lose weight? Do you need to, whatever? And then they should put you on a course to get from where you are to where you want to be, and do it as inexpensively and with as little taxes as possible, right?
Yeah, right.
And so having that plan should be a comprehensive process that sets you on the right course and then monitors and keeps you on the right course so that you're able to achieve your goals in the future.
Yeah, and you need to be doing regular annual checkups on this, right? Just like with your physical health, because life happens and you can drift. If you're got really high blood pressure and you're going to get on the blood pressure medication, you're going to eat less, salty foods, but 6 months in and you forget the medicine a couple times a week, and then you splurge on a piece of pizza or something, and then then you're off course. Having that checkup is a reminder, no, you need to be saving more. You didn't up your 401k contributions last year. Got to do it this year.
That's my least favorite part of this job is making sure that people are doing what they said they were going to do. But if you find this interesting, you have questions, you can send us a text or give us a call at 304-876-2619. We're happy to help.
Yeah, always happy to help. You can also leave comments and remember to hit the like button if you enjoyed this content.
Talk about us.
Yeah.
Spread the word. Yep.
Subscribe, share with your family and friends. Yeah. And we hope that this is useful to you and that you enjoy and that you come back for the next one. So anyway, I think that covers everything we wanted to cover today. So we hope that you find that you're financially healthy. If not, maybe some action steps to take for you to get you on the right course. And with that, we'll go ahead and wrap up. So we look forward to see you next time. You've been watching Last Paycheck, weekly wisdom to help you retire and stay that way. If you like this show, be sure to hit like and subscribe. Last Paycheck is available anywhere you get your podcasts.